Hi, this is Zak Mir with the best of 2023 here on the Bulletin Board Heroes. It's Easter Sunday and something for people who have withdrawal symptoms from the stock market. Starting off with B90, which is probably not a stock that many people have been following, but in fact, the start of the rally here started almost at the first session of the year. And apart from that dip that we had from the March peak, we've really had a decent run. Nice ricochet off the rising 50-day moving average around 4.75 pence, and above that we're looking for not only a retest of last month's resistance around 7.25, but actually a move up to as high as 9.25, perhaps as soon as the end of this month. But at least while we're above that 5 pence area, looking strong for a continuation there at B90. Moving along to Cizzle, where it was quite a relief that the shares finally turned around. They had that nasty fall from around 10, 11p back in 2021. It took ages for the thing to turn around, but we had the first signs of recovery back in January and then broke that neckline resistance area around the 2 pence area. Great vertical move through the end of February and March, and now we're in a consolidation triangle, one can call it. That's still well above the 50-day moving average around 2.75 pence. Looking for a break of basically 3.5 pence and that March resistance line to give us a new leg to the upside as high as 5.5 pence. And maybe we could see that by the end of next month. Obviously, if we're really lucky, it'll be by the end of this month, but just going for that particular time frame. Golden Cross there helped the situation at the end of February, and we've had nice bounces off the neutral 50 RSI over the near term, so it does suggest that we are hopefully ready for a fresh leg to the upside. On to another stock which finally turned around this year after lots of mudslinging and other comments that we've had for it. Near vertical move for Chill Brands back at the end of, well, the beginning of February rather. And I suppose the real trigger point there, the end of day close above the 200-day moving average around 2.4 pence. Great sideways consolidation over February and March, and a gap higher, which still unfilled at the end of last month. We also broke that line of resistance from February, so that was a potential trigger for a new leg to the upside. Just how far the shares could go is suggested by the top of that rising trend channel from back in November at 6.5 pence, and we're looking for that by the end of next month, while we remain above the 3.6 area, basically the 50-day moving average. That should hopefully guide the shares higher over the near term. Moving on to a stock which did much better after putting some of its assets up for sale. I think La India is the thing in focus at the moment, but forgetting the fundamentals. Here we've got a situation where we had an unfilled gap to the upside off the lows, one of our favorite setups, largely because that's the one that tends to work, and also a rising 50-day moving average even after that. So let's say 18 pence, a notional entry area, 18, 19 pence there, and it's been a very smooth run, relatively smooth run ever since. Current situation is that we've broken the March resistance early in April, another positive sign around 26.5 pence, and above that we're looking for 36 pence, perhaps as soon as the end of this month. We've got the 50 and 200-day moving averages now both rising, so the next time they cross should be a golden cross. The run up to a golden cross tends to be the strongest part of the cycle. The other point to note, I suppose, is that we closed that gap there in the middle of last month around 21 pence, so that was a further continuation signal for the shares. Onto a stock where it was blink and you missed it for Celadon. Here, there was a day just ahead of the news when the shares did give us the signal. So we broke neckline resistance on the 9th of March. That was around the 60 pence level. So eagle-eyed people, there must have been one or two of them, may have entered on that day. Otherwise, it was trying to scramble into the situation. But it had a few retracements, obviously, that rather painful one from 175 down to 105. But now it looks as though the pullbacks are going to be less. So while we're above £1.40, looking for as high as £2.40 by the end of next month. Golden Cross right at the end of March as well, so that should power the shares further over the near term. But at least while we're above 140, and that was the basically the resistance on the way down, we're looking for further significant gains. A stock which was a real surprise in terms of being a break to the upside. I suppose the magnitude of the break to the upside, the real surprise here. W-shaped reversal, so breaking that resistance area around 0.58, and it's been up and away ever since. If you were keen, I suppose you would have been looking at the shares with the bullish divergence that we had back in February. That would have been an area of entry around 0.35, but I suppose realistically, zero point 0.6 plus was the entry point for most people, unless you saw the shares break higher on the day. That was back on the 4th of April. We've hit our first target around 1.1 pence. Above 1.1 pence, looking for a more significant move up to as high as 2 pence by the end of next month, especially while we hold above the 0.9 to 1 pence area. So let's see if GSTechnologies can deliver. Moving on to Keras, which has also bubbled up of late. The move here, really the break of that falling wedge, that was around the 1.9 pence area. Then we had the break of the 50-day moving average around 2.4 pence. And with the rising 50-day moving average, one would suggest this is a positive consolidation above old resistance. All we're waiting for now really is a break of the 200-day moving average at 4 pence. If we can get that, we're looking for as high as 9 pence, maybe as soon as the end of next month. The reason for saying that is that when the stock moves, as you can see in the past, it can move quite significantly. Obviously, that March-April move last year was pretty spectacular. Only back below 3 pence now, really delaying the idea of further recovery. On to Kodal, which pleased the market. And we had a great reaction there back in January. A beautiful sideways consolidation to the end of last month. And the shares just missing the target here. We had 0.57, the top of the broadening triangle from back in 2021. Should not be too long before we get that, especially while we remain above the old resistance there from the summer of 2021 around the 0.48, 0.49 area. So above that, looking for further gains on Kodal. Don't want to jinx it by going for a higher target, but we would be looking for a target, something like the line I'm just drawing now, so up towards 0.75 within a rising trend channel that one can draw from back in November last year. Moving along to Marula, which I suppose one could argue has been the stock of the year in the small cap space just because of the consistency of the move. Here we had the big breakout through the 2.5 pence area, which was the notional resistance from last year. And since then, basically, it's been rising along the 50-day moving average, bouncing off there and heading higher. The last trendline break was around 8 pence. And we're looking for the shares to hit the top of that rising trend channel from July last year as high as 17 pence. And that could be seen as soon as the end of this month. But the key here is remaining above the 10 to 12 pence support zone, which has been coming in of late. Metals exploration, a stock that I didn't cover as much as the other stocks that I've mentioned here. A bit late on this one, perhaps. But we had a falling wedge break, bullish divergence, so it did all the things that we normally look for. 0.9 pence area, the notional area for going long after a bear trap as well below the July support. And here we got the ricocheting off the rising 50-day line, looking for 2.6 pence as soon as the end of this month, while we remain above the 1.8 pence initial 2023 resistance. Surprise candidate for the best of 2023 to date is NFT. Here we had great fundamentals for the shares, but we've seen that the shares have also responded, apart from that setback that we had from 1.7 or 1.875 to 1.1. Unfilled gap to the upside this week, and that suggests that we've got a new leg coming up, especially if the shares continue to be supported by that rising 50 and 200-day moving averages. We've got a rising trend channel there from May last year, top of that channel heading for nearly 3.5 pence, and that could be seen or hit by the end of next month. I mentioned Premier African, and here it is. Great looking chart, and similar in a way to Marula, maybe in some ways more spectacular, but that's just a matter of judgment. Here we're looking for 1.1 pence as soon as the end of this month, while we hold above recent support around the 0.85 pence area. So even though we come up a long way, there could still be some fresh gains, especially given the way that on the way up we've seen new support come in at or above old resistance. That tends to happen only in the strongest of situations. Onto a stock which was a surprise riser. The hint that I saw was on Twitter with a few people suggesting that the shares were a buy from, I suppose, the mid-20s. The shares eventually fell down towards the 20 pence area, but we had bullish divergence in the middle of last month, and the shares made good on that. Look at all those positive candles that we've had. Unfull gap to the upside last week, and we've held the gap and actually closed well above it. That suggests that not only will we be able to hold our initial target of 60p, but we could even head up to as high as 105 by the end of next month. So very strong turnaround. All the positives there with the bullish divergence as well as the recent price action where new support came in at and above old resistance in February. Just a couple to go now. The another one that I didn't look at as much as I would have liked to was Scirocco, but I suppose it's never too late. Here you can see that we've got this initial rising trend channel target around 0.49 or say 0.5. Above that, we're looking for a fresh leg to the upside, maybe by the end of next month, as high as 0.7 pence, which would take the shares back to where they were early last year. This stage only well below 0.35, really delaying the upside scenario. That was the old resistance back in July last year. Finishing off with a stock which seems to be very impressive indeed, at least if you've interviewed the CEO of the company, Zinnwald. Here we had one of those vertical moves, bullish divergence, breaking the 50-day line and the falling wedge. That happened in this case in mid-February. The only fly in the ointment here was the sharp pullback from the peak back in February. That basically was a double top at that time with the September peak, but the shares have delivered a massive unfilled gap to the upside, and a break of 11 pence could take the shares up to fresh highs as high as 15 pence at the top of a rising trend channel from June last year. This stage only well below 9 pence, and the top of that gap really delaying the upside scenario. That's it for me today. Proper bulletin board heroes coming up tomorrow.